بسم الله الرحمن الرحيم. الحمد لله والصلاة والسلام على رسول الله وآله وصحبه أجمعين. Distinguished participants, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, good afternoon, and good evening to everyone. Thank you very much for joining us today and following us from different parts of the world. We will start our event today with the recitation from the Noble Quran. And therefore, I will invite my brother Zarar to recite some verses from the Noble Quran. Over to you, brother Zarar.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. يا أيها الذين آمنوا إذا تداينتم بدين إلى أجل مسمى فاكتبوه وليكتب بينكم كاتب بالعدل ولا يأب كاتب أن يكتب كما علمه الله فليكتب وليملل الذي عليه الحق وليتق الله ربه ولا يبخس منه شيئا فإن كان الذي عليه الحق سفيها أو ضعيفا أو لا يستطيع أن يمل هو فليملل وليه بالعدل واستشهدوا شهيدين من رجالكم فإن لم يكونا رجلين فرجل وامرأتان ممن ترضون من الشهداء أن تضل إحداهما فتذكر إحداهما الأخرى ولا يأبى الشهداء إذا ما دعوا ولا تسأموا أن تكتبوه صغيرا أو كبيرا إلى أجله ذلكم أقسط عند الله وأقوم للشهادة وأدنى ألا ترتابوا إلا أن تكون تجارة حاضرة تديرونها بينكم فليس عليكم جناح ألا تكتبوها وأشهدوا إذا تبايعتم ولا يضار كاتب ولا شهيد وإن تفعلوا فإنه فسوق بكم واتقوا الله ويعلمكم الله والله بكل شيء عليم.
ما شاء الله تبارك الله جزاك الله خيرا أخي Sheikh Zarar for this beautiful recitation. Distinguished participants, ladies and gentlemen, it is my great pleasure to welcome you to our webinar for the launch of the IIFM Annual Sukuk Report, 14th edition, featuring year 2024 data. Your participation today, especially given your busy schedules, demonstrates a shared interest and commitment to navigating the evolving dynamics of the global sukuk markets. We truly appreciating you making time to be with us today. A total of 240 participants from around the world have registered for today's webinar. And the number is good, mashallah. Ladies and gentlemen, distinguished participants, IIFM mission goes beyond standardizing documentation. We are fully committed to providing the industry with the insights and knowledge needed to make informed decisions and seize opportunities in a complex financial environment. So I urge you to join the IIFM membership to leverage the power of the IIFM ready-to-use standard documentation. IIFM membership offers key advantages such as saving cost and time, mitigating transaction risks, ensuring Sharia compliance and legal certainty, and gaining immediate access to IIFM published standards and its usage. So we encourage you all, institutions and stakeholders in the Islamic finance industry, wherever you are, to join the IIFM as active members to support the industry further development. Distinguished participants, ladies and gentlemen, for your information, this year's report has been completely redesigned to align with modern standards, offering enhanced visual appeal, improved readability, and a more streamlined narrative. You can see that from the previous years. These achievements, ladies and gentlemen, is a direct result of the exceptional efforts from the IIFM team and staff, and we thank them for that. Accurate and verifiable Sukuk issuance data is essential for meaningful market analysis and is a key element of this report. As a leading Islamic infrastructure and global standard setting body, the IIFM's data verification process is proudly supported by regulators in key Sukuk issuing jurisdictions, including the Kingdom of Bahrain, Malaysia, Indonesia, Pakistan, Turkey, Brunei, and others, making the IIFM annual Sukuk Report a reliable source of data and analysis for industry stakeholders and decision makers. Ladies and gentlemen, over the past years, we have witnessed significant transformation and developments in the Sukuk market, particularly in the increasing importance of sustainable finance and climate-related Sukuk, as well as the hybrid and intangible asset Sukuk. Today, our distinguished speakers will provide a detailed analysis of the importance of hybrid and intangible Sukuk assets, Sukuk, exploring the innovative engineering of their structures and the industry's urgent need for standardized documentation. From the IIFM perspective, the standardization of the hybrid and intangible asset Sukuk is a prominent topic in Islamic finance that needs attention. Our objective today is to provide participants with a comprehensive understanding of the current Sukuk market landscapes and future prospects, and to help all stakeholders manage potential risks and capitalize on new opportunities. The publication of these research reports was made possible thanks to the generous sponsorship and support provided by DDCAP Group, Kuwait finance house known as KFH, ABC Islamic, and Labuan Financial Services Authority, Malaysia. Finally, ladies and gentlemen, I encourage you to type and send us your questions during the session. We have set aside time at the end to answer them. Thank you very much for your attendance and participation. We look forward to a fruitful discussion and to sharing the valuable insights contained in the IIFM 2024 Sukuk Report. Without further delay, I have the honor and privilege to invite the Honorable Mr. Afendi Rashdi, Director General, Labuan Financial Services Authority, Labuan FSA, Malaysia, and Vice Chairman of IIFM, to deliver his keynote address. Over to you, Tuan Rashdi. Terima kasih.
Thank you. Honorable board members of International Islamic Financial Market, IIFM, Dr. Ahmad Rufai, Acting CEO, Head of Compliance and Standards and Development, IIFM Bahrain, distinguished guests, esteemed colleagues, brothers and sisters around the globe. Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, and good evening. It is a profound honor to join you today for the launch of 14th Annual IIFM Sukuk Report. I extend my sincere appreciation to IIFM for organizing this important global discourse and for granting me the privilege to deliver the keynote address. This event is not merely a review of Sukuk trends. It is a celebration on how far Islamic finance has progressed and how far it can go when anchored in values of transparency, ethics, and shared prosperity. On behalf of the Labuan Financial Services Authority, a proud founding member of IIFM, allow me to commend IIFM's unwavering leadership in advancing international Islamic financial standards. Over the years, IIFM has become a pillar of stability and harmonization, producing standards that strengthen market confidence, enhance legal clarity, and promote Sharia consistency. Today's report is yet another testament to this critical global mandate. Ladies and gentlemen, the Sukuk market today tells a compelling story of resilience, relevance, and reform. In 2024, the global Sukuk market crossed a historic milestone, surpassing $1 trillion in outstanding issuance. This achievement reflects not only the depth of Islamic capital market, but also its ability to remain resilient amid geopolitical tensions, shifting interest rate expectations, and challenging global economic conditions. Total Sukuk issuance rose 11% year-on-year to reach $254.8 billion, driven largely by vibrant activity in GCC region, especially in Saudi Arabia. Sovereign continued to dominate issuance, guided by fiscal requirements and refinancing cycle, further demonstrating Sukuk growing importance as a dependable instrument for national development financing. Beyond this number, however, lie deeper themes that are shaping the next chapter of global Sukuk landscape. Sustainability, digitalization, standardization, and geographical diversification are among the transformative forces that will define the future of this industry. They demand thoughtful leadership from all market stakeholders, including regulators, issuers, investors, and international standard setters such as IIFM. One of the most significant developments is the rapid growth of sustainable and climate-related Sukuk. The momentum is clear. In the first half of 2025 alone, sustainable Sukuk issuance reached $9.3 billion, up from $7.4 billion the year before. The United Nations Development Programme has identified green Sukuk as a pillar of sustainable finance, perfectly aligned with Islamic principles of stewardship and environmental responsibility. In this regard, Labuan IBFC is proud to be at the forefront of innovation. We recently achieved a landmark milestone with the world's first renminbi 200 million climate Sukuk, a structure that integrates Sharia principle with carbon credit-linked asset and digital tokenization mechanism. Backed by 40,400 tons of verified carbon credits from Selangor's one of the nation states' Green Initiative Program and projected to generate approximately renminbi 83 million in credits over the next 5 years, this Sukuk finances ESG certified LED installations capable of reducing more than 65,700 tons of carbon emissions. It stands among the earliest Sukuk globally to be directly tied to climate transition, financing, and digital carbon asset infrastructure. Digitalization represents another major force reshaping Sukuk markets. Around the world, including in Malaysia, markets are exploring blockchain-based issuance, tokenized investment instruments, and smart Sukuk structures. This is not a passing trend, but an industry imperative. Labuan IBFC has taken early leadership in this space through the establishment of the Islamic Digital Asset Center (IDAC) in 2022. Notably, the world's first tokenized institutional Sukuk, the tokenization of the International Islamic Liquidity Management Corporation (IIFM) Sukuk, was executed in Labuan. This proved that tokenization is no longer theoretical, it is becoming the new normal. Tokenized Sukuk offer meaningful advantages, including reduced overhead costs, greater transparency, fractional investment opportunities, and broader global access. Innovation in Tier 1 structures, hybrid Sukuk, and sustainability-linked instruments continues to grow and must be embraced. We are also witnessing growing geographical diversification in Sukuk issuance. The market is expanding beyond its traditional heartlands, with Africa emerging as a promising growth region as sovereigns turn to Sukuk to address infrastructure needs. The GCC continues to show strong performance, with Qatar 2025 Sukuk issuance achieving the lowest yield in SIMA region, signaling strong and sustained investors' appetite. Domestically, Malaysia remains an anchor of Sukuk activity, demonstrating consistent market maturity and capacity for innovation. Despite a backdrop of macroeconomic uncertainty, the Sukuk market continues to demonstrate resilience. While local currency issuance in some markets is under pressure, global issuance volumes remain robust, and investor focus is increasingly on issuers with strong fundamentals, solid Sharia governance, and credible credit profiles. Investors are becoming more selective, favoring high-quality sovereigns and strong corporates. Yield dynamics in 2025 further reinforce the continued attractiveness of high-quality Islamic papers. Tightening yields in Malaysian AAA Sukuk segment, combined with historic low achieved in Qatar, point to strong demand for quality issuance. This creates both opportunities and responsibilities for innovators. Structures such as GDP-linked Sukuk and other emerging formats must offer competitive returns, genuine asset backing, and transparent risk-sharing mechanism to ensure long-term credibility. Ladies and gentlemen, reflecting on these market trends and Sukuk development, it is evident that the market stands at a strategic inflection point. Its next chapter of growth will be shaped by these transformative forces. IIFM's leadership will continue to be essential in guiding the industry toward harmonized, operationally workable standards that safeguard the integrity of Islamic finance while supporting innovation. I look forward to seeing IIFM further advance this effort, particularly in developing standards that address the emerging priorities of this industry. As we convene today, let us guided by the timeless principle by the Quran. Do not spread corruption in the land after it has been set in order, and call upon him with hope and fear. Indeed, Allah's mercy is always close to the good doers. Surah Al-A'raf, verse 56. In this spirit, I invite all stakeholders to work together to build a more resilient, innovative, and ethically grounded Islamic financial ecosystem, and to tajdeed or niyat, renew our intentions so that all our efforts are ultimately in pursuit of Allah's mercy. I wish all of you a productive deep dive session, and once again, congratulate IIFM on the publication of this exceptional 14th Sukuk Report. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Your Excellency, for this informative and insightful, mashallah, keynote address. And by the way, this is not something strange from the Sukuk leading country, negara kita, negara Malaysia, our country, Malaysia. So, alhamdulillah, jazakallahu khairan for this excellent keynote address, inshallah. So, as per the, according to the Sukuk reports, as I mentioned in my opening remarks, that the Sukuk, this edition is completely redesigned to make it simpler, to make it readable, less wordy and lengthy text, in order to match the standards, the standard, reports, published by, the market. So as per the takeaways and findings of our Sukuk Report 14th edition for this year, the global Sukuk markets, according to our report, continue its strong growth, attracting more issuers and investors. And the evidence of this is the increased issuance from both established means those who are very, very known for issuing sukuk, like Malaysia, Saudi Arabia, UAE, Indonesia, and others, and also the emerging jurisdictions, as his Honorable Vice Chairman mentioned, like Africa and others. So to summarize the findings, which are the most important to us and to all of stakeholders and those who are with us. Number one, the international issuance, according to the report, hits a record high of 65.6 billion US dollars since its inception, means since the Sukuk inception, a 24.5 increase from USD 52.7 billion in 2023. So you can see the difference, almost around 12 million or something like that, 12 billion, yes, difference. So international issuance really is doing well. Number two, total global issuance used to be higher, but in 2024 dropped slightly to 205 billion, down from 212 billion in 2023. And the results, or the reason for that, as per the report, is the weakened activity in domestic markets. That's why the global issuance in general, really declined slightly, not very high, from 212 billion to 205 billion. With regard to short-term issuance, also declined from 72.7 billion US dollars in 2023 to 559.1 billion in 2024. Almost the same reason with the global issuance, which is reduced domestic market activity. As for the global outstanding sukuk, as of late 2024, it has reached, we know, as His Excellency mentioned, that of course the number is higher in 2025. That's why we said as of 2024, it has reached 902.82 billion US dollars. Of course, with most issuances from established markets like the Kingdom of Bahrain, Malaysia, Kingdom of Saudi Arabia, United Arab Emirates, etc. However, our Sukuk report is based, the data based on, or the strength of the Sukuk report is through the chapter 1 of the Sukuk report. And one of our staff in charge of this, of the chapter 1, who prepared the charts for this chapter 1, by the name Mr. Babar, he will take us through some few charts regarding the issuance in 2024. The details of the findings of this report and takeaways, we encourage you to read it, to read the report. Inshallah, you will find it very interesting. Here we are trying to summarize it due to the time constraint. Over to you, Brother Babar.
Thank you so much, Sheikh Saab, and Assalamu alaikum to panelists and the participant. I will just quickly go through. This is a snapshot of the global scope market. It raised $2.2 trillion from 2001 till 2024. So, and from that, 535 billion reached international scope market, and domestic market reached $1,675 billion. And 2024 was, as Sheikh mentioned, is closed at 205 billion, slight decline from the previous year due to the domestic market activity. But the international sukuk issuance, as you can see, is up by 24%, and the long-term issuances increased by 29%, and the short term also increased by 8.7%. Domestic market was slight drop due to the short-term issuances. So I will go through the in detail. So slide 1. So that's the detail of slide. Last year it was $138 billion, the long term, and this year is closed at 146 billion, which is increase of 4.8%, the global long-term issuances. But in the short-term issuances, there's a drop of almost like 18.7% due to the short-term issuances from jurisdictions. Next. International Sukuk market issuances increased by 24.5%, and in the longer tenure also it increased by 29%, and the shorter also 8.7%. International Sukuk issuances was due to the increase due to the sovereign issuances from various jurisdiction and the financial institutions. International issuances as compared to 2023 was 164% up, and Kuwait sovereign was 38.4%, and corporate was actually slightly down. There's less activity in the corporate sukuk, and sovereign was almost 14.1% higher as compared to the last year. Next. This is about the structure. As you can see, the most used structure is the Wakala structure in the international Sukuk issuances. And then we have hybrid Ijara and Wakala. If we combine whole hybrid Sukuk, the share is almost 23 billion, which is 35.5% of the issuances in the international markets. And in the domestic market, the share is of hybrid sukuk. Most used sukuk is due to because it's a mix of longer tenure and a shorter tenure. So sukuk al-murahaba was 45%, but the hybrid sukuk in the domestic market is around $40.9 billion, equivalent to the share in percentage is 29.34%. Next slide. In the domestic market, we saw a slight drop of around 12% due to the short-term issuances and few. In the longer tenure, the drop was around 5.3%, but in the short term, drop was around 23.9% due to some jurisdiction sovereign discontinuing from the short term and shifting towards long term. And that's the global outstanding sukuk which we have as of 31st December 2024, $902 billion, and consists of the share of sovereign is almost 58%, corporate is 18%, financial institution 11%, and Kuwait sovereign 13%. So thank you so much for this opportunity, Sheikh Saab. So I ask to all of you to download IIFM Sukuk Report for further analysis and details. It will be available on IIFM website shortly, inshallah. Thanks, Sheikh.
MashaAllah, tabarakallah. Thank you very much, Brother Babar, for this summary. We try to summarize it and make it short. So this is the summary of the finding, the main thing that we want people to take a note. And as Brother Babar said, we encourage you to read the whole report for detailed information, and you will find it very interesting, inshallah. So, ladies and gentlemen, the work is successfully completed. The work is done. And I'm pleased and excited to announce that the IIFM Annual Sukuk Report at this time, at this hour, 14th edition, featuring year 2024 data, is officially launched today. Thank you very much. None? Okay, thank you very much. As we said, mashallah, after the events, inshallah, you can download the Sukuk report from our website. As I mentioned earlier, this year, everything is, we try to redesign the whole Sukuk report, as well as also the launching of the Sukuk report. Since I am representing Sharia compliant, institution, so we try our best to make even the presentation of the launching to be inclined to Sharia compliant without musical instruments. So now is the time to invite our, mashallah, knowledgeable and renowned panelists to take over the floor and feed us with more information under the leadership of my sincere brother, renowned, person in the industry, brother Lilian Bouyassine. Over to you, my brother.
Barakallahu fiqh, Sheikh. Assalamu alaikum, everyone. Bismillah ar-Rahman ar-Rahim. It's really a pleasure to be with all of you. And again, big congratulations, Mabruk, for IIFM for the launch of this report, which I'm sure is going to be very important for everybody, actually across the various meetings I'm having with people across the globe. IIFM is more and more people are talking about IIFM, more and more people are talking about the work done by IIFM, the standards, but also the Sukuk report is an important part of IIFM work. So again, congratulations to the team, and it's great to see that again IIFM is making the job, as you said, Sheikh. Without further discussion and introduction, I'm going to just move quickly to our panel. We have roughly an hour and 20 minutes, up to 12 more or less, to discuss the new trend on the Sukuk. It's important for everybody to understand that the industry and mashallah, the work done by FM is definitely very important to give an overview of the global Sukuk. But the global Sukuk really, it's important to understand that there is the global Sukuk per se with the international issuance, and then you have the domestic Sukuk, and they are kind of different dynamics. When it comes to the international Sukuk, definitely we see an increasing share of the hybrid Sukuk, and it's exactly what we are going to discuss today. IIFM is trying always to be at the forefront of the trend in the industry. It has been the case over the last 20 years. They came with more or less 20 standards. They will soon achieve 20 standards of documentation, which are widely used. And in this modern world of social networks, a lot of people speaks a lot without doing much. I think IIFM is exactly the opposite. They do a lot without speaking much, and I think it's the work speaks for themselves. 20 standards, mashallah, who are widely used, and I encourage you again and again to become members. All of you, whoever you are, I see that there's 100+ participants. Speak to your organization if you are not the decision maker. If you are the decision maker, it's even easier. Go and take a checkbook and send a check to IIFM, because they definitely need you to continue the good work. So on the panel itself, the idea really was to put together specialists to have definitely an insight when it comes to as a practitioner and when it comes to market practice, but also to have some Sharia experts, some lawyers who are obviously very important when it comes to documentation and when it comes to structuring the deals. We have with us 7 or 8 panelists. The idea, it's always a bit difficult, especially online, to make the session really living and with people asking questions. But I do encourage you to ask questions. I'm sometimes, you're taken in with the flow of the discussion, so you don't see necessarily all the questions as a moderators. But I know that IIFM team will have a look at the webinar chat and making sure that they make me know whenever there are questions which are interesting. I think for the sake of the flow, we will take the questions towards the end. But again, this is more a message for the IIFM team. In case you see a question which really could be an interesting one, even if it is in the middle of the discussion, please do interrupt me, and let me know so that we can pass the question to one of our panelists. So in our panelists, the idea of you've seen, all of you have seen the program of today. There is a part one, which is going to be the main discussion around the hybrid sukuk. It's always difficult to give statistics, and sometimes statistics are, you can see some figures which are not always tallying with each other. But it's fair to say that the hybrid sukuk is definitely dominating the US dollar sukuk issuance in the GCC at least. And that's a clear trend we are seeing. And that's why we thought, an IIFM team thought that it was very important today to discuss this and take this as the core discussion of our panel. And then a second part we will discuss about, because again, mashallah, IIFM is trying to always be ahead of its time. So we'll try to discuss about more, I would say, not exotic, but more innovative structures, things which are not still not the plain vanilla sukuk or the mainstream sukuk structure, but which we see a trend, and there will be especially a discussion around the waqf sukuk done recently in Indonesia. So without further discussion, I will introduce our panelists. I will introduce them in order of them coming to the screen to you. So our first panelist is Sabir Ahmed, is the head of Islamic Market and Structural Solutions at Standard Chartered. We obviously don't introduce Standard Chartered. It's one of the most active global franchise when it comes to sukuk structuring, Islamic syndications, and structured products. So that will be Sabir, our first panelist. After Sabir, we'll have Dr. Ayaz Ismail, who is a Director of Islamic Wholesale Banking at CIMB. Again, CIMB, a big player in Malaysia, so always interesting. IIFM being a global, although IIFM is based in Bahrain, and I'm also myself in Bahrain, but we obviously trying to have a global mindset, and rather than just being a GCC centric. So Dr. Ayaz will give us a bit more details about the trend in the Malaysian market, which is, after the GCC, the second biggest market when it comes to sukuk issuance internationally, but actually domestically, it's the leader of domestic issuance. After him, we'll have my brother Mohammed Al Nassar, ex-colleague of KFH, who is a chief dealer at one of the largest Islamic bank globally, so KFH, and he will bring his expertise as a practitioner especially on secondary market, and will confirm or not, but hopefully will confirm what we see as the trend on the hybrid sukuk. We'll have then two more panelists on this part one, hybrid sukuk. One is a very well-known Sharia specialist, and Dr. Mohammed Al Bashir, who is advising the CEO of ICD, part of the Islamic Development Bank. He is a prolific scholar and author on Islamic finance, and he will bring his expertise as a Sharia expert on this topic of hybrid sukuk. And obviously, we can't talk about sukuk without a lawyer in the room. So our lawyer today will be Salman Ahmed. Brother Salman is a partner and head of Islamic finance at Schroders and Hamlins, a leading Islamic capital markets lawyer. Is very well known in the market, and he will give us also his insight. And in the second part, we'll have two panelists, although I mean the other panelists that I just quoted now will be obviously able to intervene, but we'll have two other panelists. One is David Testa, is an executive director of DDCAP. He has more than 2 decades of experience in Islamic finance, and he led some UK and GCC transactions. And for the one of you who are a bit older in the room, you probably remember that David was also the CEO of Gatehouse Bank in the UK. And finally, I mentioned it briefly at the beginning, we'll have Mr. Sudar Mawan. Dr. Sudar Mawan is an economist at Bank Indonesia, and he is actually the person in charge of Islamic financial market development and regulation for Bank Indonesia, which is the central bank of Indonesia. So a long list of mashallah experts with different background, and the idea really is to have this as many questions that you can have. Don't hesitate, don't be shy. The good thing with online webinar is that you don't need to take a mic, you can just type. So I hope that there will be many questions. And so we'll go for our first panelist, Sabir. Sabir, salam alaikum. Good to see you. As I introduced you, I mean, you're heading the Islamic capital markets at Standard Chartered, and the idea to start with you was really to lay the ground for what's going on in the market nowadays. Are we right to say that the hybrid sukuk are really taking some kind of dominance, at least in the GCC international sukuk market? Give us a little bit of your insights on this topic, please.
Thank you very much. Thank you very much, and Assalamu alaikum. Bismillah ar-Rahman ar-Rahim. First of all, thank you very much to IIFM for inviting me to this panel discussion and share our thoughts from Standard Chartered's perspective on the Sukuk market, and also a huge congratulations to IIFM on the release of the Sukuk Report. I can tell you that, you know, when we speak to our clients, when we speak to other banks, a lot of data from IIFM Sukuk Report is used by them to understand where the market is going and what are the future prospects of the market and how they can make their issuance strategies as well. So a very good job from IIFM, and I hope that the Sukuk reports will continue. It's a very good compilation of Sukuk data that is used for decision purposes. So having said that, and thank you very much, Brother Lillian. What we have seen in the Sukuk market this year is an amazing flurry of Sukuk issuances across the board. Like 2024, yes, there was a little bit of dip in terms of the volume of Sukuk issuances, but in 2025, what we have seen is that the market has really opened up. We have not seen issuances concentrated to just one segment of the business, for example, just financial institutions. We have not seen that. We have seen across the board issuances from sovereigns, from corporates, and from financial institutions. And we have seen inaugural or debut issuances as well. And what is the rationale? And then why suddenly issuers have started looking at this important funding tool? I think the reason is primarily the first one, that overall the capital markets were good this year compared to last year. The second reason is there's a lot of liquidity in the market, and there's a lot of pent-up demand for Sukuk issuances in the market. If you consider Islamic financial institutions and compare the size of Islamic financial institution, let's say 5 years back to now, these institutions have grown a lot in terms of deposits, and compared to conventional banks have a lot of investment possibilities. They can invest in conventional bonds, T-bills, so on and so forth. Islamic banks do not, or Islamic investors do not have that flexibility. Islamic investors can only invest in instruments which are Sharia compliant. And from a tradable instrument perspective, Sukuk is effectively the only instrument that they can invest in. That they can invest from a treasury book perspective, and as the size of Islamic banks have grown, the pent-up demand for Sukuk issuances is also growing, because they need to invest their excess funds, and that's the reason a number of sovereigns, like we did the inaugural Sukuk issuance for State of Qatar recently. State of Qatar has come to the Sukuk market after a long time with a Sukuk program, and we were the structuring bank for that Sukuk issuance as well. What we have seen is that issuers are going the extra mile to work on this on Sukuk structuring compared to conventional bonds, which are easier. They are going the extra mile to do the Sukuk structuring because they see the value of tapping this investor base. And that's and the size of Islamic banks, the size of Islamic investors is basically fueling the demand and the size of Sukuks. In addition to that, Another factor which is fueling the demand for Sukuk issuances is basically the investment requirements in countries such as Saudi Arabia and UAE. Saudi Arabia is following Vision 2030, and they have got very ambitious projects and plans. And Sukuk is one of the financing tools that they can use to fund that expansion program. So I think that is also fueling the growth of the Sukuk market. In addition to that, an interesting thing which we saw in UAE, and we believe that it will follow through in other countries as well, where they don't have at the moment, is the fractional Sukuk concept. So a number of banks in the UAE are offering fractionalized Sukuk to their retail customers. So, for example, if I wanted to buy a Sukuk previously, the minimum investment amount is $200,000, and I need to be a professional investor to do that. But now, on the retail side, I can open an account with one of the banks and start investing in Sukuk with any amount that I wish for. That has also expanded Sukuk instruments to the retail sector, and that will also fuel the growth of the size of the Sukuk market going forward. In terms of key prospects, what do we think? We think that there is a lot of demand for infrastructure financing in the Muslim world, and we believe that a large portion of this infrastructure financing demand will be met or can be met through Sukuk issuances. What are the key market drivers, we believe? I think the key market drivers are that previously the Sukuk market was dominated by either sovereigns or Islamic financial institutions. What we have seen now is that a number of corporates are coming in for the Sukuk issuances. Previously, they were either doing bonds or not doing anything at all, but now they are moving towards Sukuk issuances. We have seen a number of corporate debut issuers as well this year, and then we are seeing a lot of investors also interested from an investment perspective. Previously, it was just banks. Now it's opening up to sovereign wealth funds who are looking at Sukuk issuances to invest. We are seeing a lot of demand from Asian and European investors in Sukuk issuances.
Sabir, just allow me to, and thank you very much for this overview of the market and general trends. It's always good, and you're giving a good picture of the ecosystem of the Sukuk investment. But just try to focus a little bit more on the topic of today. Do you see really the hybrid Sukuk? Is it fair to say that it's taking dominance? And can you explain to the audience the reason behind the use of hybrid Sukuk structure?
No, absolutely, and I was coming to that. See, the rationale for having hybrid Sukuk is primarily that it is asset light, and when it is asset light, we have seen a number of sovereigns and corporates and financial institutions have now set up their Sukuk programs. And why have they set up the Sukuk programs? To issue on a regular basis. Now, for an issuer to issue on a regular basis, they need and their asset base is finite. So they want to maximize or utilize the asset base as efficiently as possible. So an asset light structure is absolutely favorable for issuers, and that's the reason which is fueling the demand for hybrid Sukuk issuances. If I see now all the corporate issuances that we have done, except a few where there are regulatory challenges, majority of them or almost all of them are hybrid Sukuk on the corporate side. On the financial institution side, again, because financial institutions have a constant need of financing and they are very regular issuers in the market, we have seen all the financial institutions proceeding with hybrid Sukuk structures. So basically, it is asset light, and to use the finite asset pool in the most efficient manner, that we believe is fueling the demand or the preference for hybrid Sukuk from an issuer's perspective. From an investor's perspective, they understand the structure very well, and and they are able to easily participate in it.
Thank you very much, Sabir, for this again for this introduction, which has definitely the benefit of laying the ground for everyone to understand what's going on in the market dynamic. So, I mean, clearly you clearly confirming what IIFM have seen also in its report, and on the ground you see the hybrid sukuk being used. As you said, people are looking for kind of asset light kind of structure which allow them to issue more. We clearly see it in Bahrain sovereign is a very good example. It's running out of underlying assets. So I mean the hybrid sukuk is allowing obviously for the government to continue to issue at the same pace than they have done in the past. There has always been for all participants in the Islamic banking industry, there always been a discussion around the different view that we see in GCC compared to Malaysia when it comes to tangible asset ratio, and that's why and again, don't hesitate to jump in, Sabir, if you want to. Although I will ask the question mainly to Dr. Ayaz, but I will be also interested because I'm pretty sure that you work also on transactions in Southeast Asia or in Asia in general. But Dr. Ayaz, I just want to hear from you also from your perspective, keeping in mind the fact that the tangibility ratios are less strict in Malaysia than they are in the GCC. Do you still see some hybrid sukuk in the market? How do you cope with the different view on the tangibility ratios? Are you still looking at the GCC tangible ratio, I would say, need for your issuance in whenever you want to tap the international market? Can you give us a bit of a view on this Malaysian sukuk market, please?
Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh, and good morning and good afternoon. And thank you for sharing the questions beforehand, Brother Lillian. So I will share on 4 areas within my commentary. And the first, as you mentioned, Malaysia's regulatory, legal, and market approach to hybrid sukuk and tangibility ratios. Now, in Malaysia, we've had tax incentives that promote sukuk issuance over bond issuance since 2010. The tax incentives were tax deduction on expenses incurred in the issuance of sukuk, and these savings were quite substantial for the issuer. Now, over the years, the tax incentives were given for sukuk under the principles of musyarakah, mudharabah, ijarah, and istisna. Tax incentives for hybrid sukuk were first introduced in 2011, and by 2020, only this incentive remained, and all others were phased out. And coincidentally, the incentive for hybrid sukuk expires on 31st of December this year. So as you can see in Malaysia, we promoted hybrid sukuk, and for the past 5 years, if you were a tax-paying issuer, you would very likely have gone for hybrid sukuk due to the tax incentive. Now on the tangibility ratio, now in Malaysia, our regulations state that at least 33% of the hybrid sukuk proceeds shall be invested in non-debt investment assets, and this minimum percentage must be complied with at the time of issuance of hybrid sukuk. It is not required to maintain such percentage throughout the tenure of the hybrid sukuk. However, for global hybrid sukuk issuances out of Malaysia, we tend to use the 51% tangibility ratio, as we know there are investors, especially in the Middle East, that prefer 51% as the minimum, and they would not invest if the hybrid sukuk only had a 33% tangibility ratio requirement. Now, on to the second part of my commentary, perhaps the lessons that global issuers, especially in the GCC, could absorb from the Malaysian experience. Now, in Malaysia, we stand guided by the resolutions of our National Sharia Advisory Council. The resolutions of the council set clear rules for the entire sukuk market. The rules are unambiguous, and therefore they're simple to understand and to be followed by the relevant stakeholders. The clarity in Sharia rulings that apply have been a great boon for our sukuk market. Any party may go for stricter requirements if there's a need to do so. Over the years, though, the National Sharia Advisory Council, they have tightened certain requirements, and these stricter requirements are being phased in. So what was allowed previously may need to be phased out. On to the third part, brother. Are Malaysian issuers pushing boundaries with intangible assets in Sukuk? Now, in Malaysia, we started using non-physical or intangible assets in Sukuk close to 15 years ago. We started with the domestic Sukuk issuances, and then we followed up by using non-physical or intangible assets for global Sukuk issuances. For global corporate Sukuk issuances, these intangible assets included vouchers representing future telecommunication airtime and rights to services related to supply of electricity in Malaysia. For sovereign issuances by the government of Malaysia, they issued Sukuk using the following intangible assets: the right to participate in the provision of transportation services by the government, and vouchers representing travel entitlement of Malaysia's public transport networks. Now, when it came to these non-physical assets, and especially when it was for global issuances under Reg S or Rule 144A, the requirements were numerous and onerous, including the assets must meet Sharia requirements, of course. They must be legally allowed to be used as underlying assets under all applicable laws, Malaysian law, English law. The consent of the respective agencies and government departments must be obtained, and the Sukuk must meet all the commercial requirements. And this is especially critical to obtain the necessary credit ratings. Now, as these were novel assets, it required significant amount of work to ensure that it met the requirements of all the stakeholders for a successful issuance. Now, all issuances using the assets I mentioned earlier, they were well received across all jurisdictions with no significant Sharia issues raised by the Islamic investors. Every time we worked on an issuance with a new non-physical or intangible asset, the final product would look quite different from what we started with. Nevertheless, after 10 years of experience, these non-physical or intangible assets are now quite common in the Malaysian Sukuk market, especially as part of hybrid Sukuk. Now, brother, my final part before I hand it back to you, what would help Malaysia further attract international Sukuk investors? Now, there are a number of consistent factors that will always determine where international investors will invest their money, namely their appetite for a particular currency, in our case, the Malaysian ringgit, and their appetite for certain credits, in our case, Malaysian credit. In Malaysia, we do see international investors investing in our short-term government bond and government Sukuk issuances. They make up about 20% of total holdings. Corporate Sukuk issuances, though, much lower holdings by international investors. Some steps that we could take to attract international Sukuk investors to Malaysia could include strengthening our disclosure requirements, perhaps, to international standards, including our Sukuk in selected global indices, and perhaps formal collaboration between our local and international rating agencies to map the local ratings with international ones. So, brother, I hope I've done justice to the time given. Thank you, and back to you.
Very useful, because, you know, there's always these discussions in the market around Malaysia having a specific thing. And I think it was important to highlight the fact that despite you have a bit more relaxation when it comes to your local Sukuk on the tangibility ratio, you obviously, because it's a dynamic market, and especially when you want to tap GCC investors, you're trying to stick to the general mainstream rule of the 51%, which we all know is also part of the debate going on the AOFI standards on the Sukuk. It's included in the AOFI standard 62 Sukuk discussion going on as we talk. But thank you for this insight. We're going to become a little bit even more practical. Both of you guys, Sabir and Ayaz, you're mainly on the primary issuance, on the structuring. You are the guys who are putting the sleeves up and making up the Sukuk. Now let's go to the guys who are making money out of the Sukuk. So my dear brother Mohammed Al Nasser, who is the chief dealer of Sukuk, the Sukuk desk in KFH in Kuwait. Mohammed, if you can just bring also your point of view as a dealer, so more a practitioner, but even more practitioner maybe than the previous guys, because you are really the one looking at what's going on in the market and what's going on in the secondary market.
Inshallah. Assalamu alaikum, everyone. Thank you, brother Abu Yassin, for moderating this panel. Now, from my experience in the earlier years of the Sukuk market, what we saw was the most prevalent and straightforward structure or hybrid structure was the إجارة مرابحة, and we used to see it with many issuers. Now, with the growth of the Sukuk market and the increase of issuers and issuances, we are seeing وكالة مرابحة hybrid structures, وكالة إجارة مرابحة, for example, Bahrain and KSA, and as well the مضاربة مرابحة structure. From my point of view, we will continue to see innovation in the structures of hybrid Sukuk, and this is where the intangible assets conversation could come into the equation, inshallah, in the future. Now, from a tradability point of view, from a trader's point of view, as long as the structure is widely Sharia acceptable, then there is no issue on the tradability of the Sukuk. Now, before this panel, I was in conversation with our Sharia board just to have an idea of their point of view on the tradability. What I understand is as long as the 33% tangibility ratio is maintained, then the Sukuk is acceptable from a Sharia standpoint. However, I received a comment that 51% is the ideal ratio, especially for when you talk about Wakala, Murabaha Sukuk, since the fluctuation in market price of the asset could move significantly. So therefore, the buffer between 51 and 33% is comfortable enough so that it doesn't trigger any action. That's it from my side, from the market point of view. If there is any follow-up question, I'm happy to answer.
Yeah, it's important what you said, actually. It's the way the 33% and 51% work for people who are listening and might be a bit technical. It's basically the idea is a bit like margin calls when it comes to leverage finance, in the sense that because there's a fluctuation of the asset tangibility ratios, the idea is to start with a 51%, or above. Some people structure it even at 55 or more, so that in case it goes in the gray area between 33%, which is the absolute minimum, and the 51%, then you can continue to trade it. But typically there is some kind of clause in the documentation saying that the issuer should actually take action to restore the tangibility ratio back to the initial level of 51%. And it's a perfect transition to the last two panelists on this part one, which will allow me to do the transition, which is on the documentation itself. Obviously, we have two main actors when it comes to the documentation. On one side, we have the Sharia experts, the Sharia scholars who are looking at the documentation, and we have also the lawyer, obviously. So we'll start with the Sharia and with Dr. Bashir. Dr. Bashir, the idea to have you on this panel was obviously with your vast experience in Islamic finance, mashallah, to give your perspective on the hybrid sukuk. How do you see it? Can you also, while we were preparing for this panel, we had an interesting discussion on tangibility and versus debt underlying instruments on the sukuk structure. So can you just clarify what are the tangible assets? Can we consider intangible assets are available for structuring sukuk, which will become tradable? Just give us your expertise and come up with some good points as usual, mashallah, Dr. Bashir. You are on mute, Doctor, sorry. Just check, I'm not sure if I can unmute you. Yeah,
yes.
No, you're back.
Yes. Bismillah ar-Rahman ar-Rahim, alhamdulillah rabbil alameen, wa salatu wa salam ala ashrafil mursalin, Sayyidina Muhammad wa ala alihi wa sahbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatan min lisani yafqahu qawli. First of all, I would like to take this opportunity to thank IIFM for inviting me for this webinar. It is an honor for me to be sharing some of my humble idea with this great panelists. And at the same time, I would like to congratulate IIFM for the launching of this new Sukuk Report. And definitely, as it has been said by Brother Lilian, The standard, what they call the report, is widely used by the industry, and in IIFM and ICD and IDB here, we are sometimes referring also to this report. And we are using, what is more important, we are using many of the IFM standard, and this is the main job of the IFM itself. With regard to the issue of you call Sukuk and intangibility ratio and intangible Sukuk, and it is a very important one because it is addressing one of the most important structure of Sukuk in the market. Because this one is, as it is said by the panelists before, it is somehow very light and it is attractive to issuer and at the same time investor. But the issue has been somehow discussed now, in particular because of the adoption of the standard 59 by OIF, which have somehow raised the bar from the 33% used before for the tangibility ratio to 51%. But based on this one, we can say that this one is also based on the major principle of Islamic finance, that Islamic finance is different from conventional finance. And one of these differences is to be asset-based. It is based on asset, it is not only based on debt. And based on that, it is not about trading debt, but it should be somehow a kind of asset that can be traded, and therefore the Islamic finance is somehow differentiating itself from the conventional one. And at the beginning, when the scholars have adopted the 33%, it is because it is the minimum possible, and below this one, there is an issue, and maybe it will not be accepted from Sharia perspective. And later on, when they have realized that the 33% is somehow taking ground and the Sukuk market is developing, then they have pushed the bar in order to go to the 51%, which is the ideal and the most acceptable one from Sharia perspective. And therefore, they have accepted this one to be the limit for now for the Sukuk. And the most important thing is still the 33% is not totally abandoned by the Sharia scholar. And they are saying, even if the Sukuk are 51%, but to some, based on some circumstances, maybe because the Sukuk issued face some problem and then go below the 51%, still it can be maintained and they still be considered to be Sharia compliant, but at the same time, it should not be going below the 33%. But when it goes below to the 33%, then immediately here this one will trigger issue of the solution of the Sukuk and maybe the listing of the Sukuk from the stock market and so on and so forth. And this one is to maintain, as I said, the major issue that Islamic finance is about asset and it is not about trading debt. And the reason behind this are very clear, not only from Sharia perspective, even from the economic perspective, trading debt is considered to be not healthy. And we know, as we know, all of us, that one of the reasons behind the financial crisis of 2008 was this about debt. And today also people are talking about debt and it is problem for the whole economy. Based on that, it is now for IFM, the job will be easier because based on the existing information and data, almost all the issuers to this market now are accepting the 51%. And so many Sukuk have been issued based on that, and there is no issue at all. Although some markets are going for the 51%, and as Dr. Azhar said from Malaysia, still when they are going for international Sukuk, they are considering the 51%. And this one confirms the fact that even rating agencies are accepting this one, and they are saying it is not making any difference in the market. Yes, at the beginning, when the standard have been adopted, maybe a few months, 6 months or 8 months, there is somehow disruption in the market because people are somehow afraid and this one will make a problem to the market. But later on, the issue have been accepted and it become very accepted by all of them. And now it is very clear. Then from the tangibility ratio, it is 51%. But when it go to below 33%, then at that time it is it trigger the solution and maybe the listing of the Sukuk from the stock market. Another issue, just to say, for example, some of the But one of the issues that somehow concern many investors here, particularly the sovereign, they are saying they could not identify very tangible assets that will allow them to go to the market with this tangibility ratio. But at the same time, if they have been advised very well by their legal and structuring, what they call expert, I think they could identify them, that one. But at the same time, maybe IIFM and it is what they call documentation and the standardization, maybe they can give somehow open the door for sovereign in this regard, so that they are not somehow taken out of the market, but still it is possible for the sovereign also to adopt the 51%. Because if you have seen, for example, some of the main issuer in the market, when I am reading about the main Sukuk issuer, for example, the ILM, they are very regular participant in the market, and they are saying they are comfortable with the 51%, and because their asset, their portfolio of assets is generally about 79% tangible asset. And this opens the door, for example, because they are investing in Sukuk. And this also one of the aspects that will make Sukuk, the tangibility is not only about establishing new Sukuk, new asset, bringing new asset. If you are investing in Sukuk, you have already invested in Sukuk, and this Sukuk is composed, for example, of tangible asset and intangible asset. You are allowed by the Sharia scholar to go and take your portfolio, which is composed of Sukuk, take the asset existing in your Sukuk and already in your portfolio, and consider it to be part of your new Sukuk. This also it is part of the, for example, you have invested in Indonesian Sukuk 30 years, what they call maturity, for example. And this Sukuk is having 51% asset. Then this asset is existing in your portfolio for the upcoming 30 years. Then you can take part of this asset, for example, 10 million, 20 million, 50 million, and you can add it to your asset because they are assets in your portfolio, and you can structure based on that one another Sukuk maybe for 5 years or so and so. Then this also, it is another flexibility existing by the Sharia scholar for those who are willing to go for the what they call hybrid Sukuk, because the hybrid Sukuk is somehow solving so many problems existing in the financial market and the Islamic capital market. Another issue that I want to mention very shortly before concluding my remark here is about the recently adopted about the title agency, and this one also is addressing another issue that existing in the hybrid Sukuk. Because in hybrid Sukuk, always you will be having the asset, and there is a concern whether this asset should be registered or should not be registered. But it comes after, for example, it is accepted now by the different party. For example, from the beginning of this year, I think that it is not a condition to register the asset for this asset, the asset Sukuk. The Sukuk asset should not be, it is not a condition, should not be registered. But when the issuer is having problem, he will give the trustee the right and they to go and register this one in the name of the Sukuk issuers. This also is a very important issue that will solve so many of the issue. And because some are coming and saying, because if you are asking for the registration of the Sukuk, this one will make Sukuk much costly, and it will be taking time and so and so. Then from Sharia perspective, at the beginning, we are saying it is not a condition to register the Sukuk asset, but this one should not undermine the right of the Sukuk issuers, the Sukuk holders, the right of ownership and benefit from the asset of the Sukuk. Based on that, maybe I can give the back to Brother Lilian so that others can also speak on this issue, inshallah. Jazakumullah khair.
Barakallahu fik, Dr. Bashir. Just a follow-up quick question, because we had this discussion during our preparatory call, and that was an interesting one. You know, we keep talking about asset tangible and tangibility ratio of 51%, but isn't it more appropriate to speak about 49% debt ratio, in the sense that as long as you have asset, even if they are not tangible assets, could be intangible assets, as long as you have less than 49% of debt instruments, then you can have the Sukuk being tradable. Can you elaborate on this, please?
Yes, definitely the issue is about that. And as I said from the beginning, what is intended by the Sharia scholar in putting this, what they call percentage and the others, is to avoid trading debt. And therefore, tangibility is not about physical asset, but it is about asset that it can be considered legally as asset and from Sharia perspective as asset. As long as it is considered asset, then it is not necessary to be tangible, but it is an asset. For example, telephone airtime, for example, what they call copyright and the others. All these one are considered asset, but it should not be debt, because the debt is somehow restricted from Sharia perspective, and even it is confirmed from economic and the financial perspective that it is always harmful to the society, and it should be limited to the possible extent to what is necessary. And based on that, the issue, yes, it is definitely about debt. And if the debt go 49%, then it should not go beyond 49%. And as I said before, it should, when the Sukuk have been issued, it should be continuing to be 51% throughout the life of the Sukuk. But if anything happened during the life of the Sukuk, it come down below the 51%, it should not be allowed to go below the 33%. Otherwise, it will be considered somehow dissolution event and maybe delisting from the stock market.
Barakallahu Fik for clarifying this. I think it's important because sometimes there is a bit of confusion. We keep saying tangible ratio when actually we should say maybe as asset ratio, or maybe we should look at the equation the other way around and focus on the fact that, as you rightly said, and as it is recognized even by conventional economists and regulators, the main issue and the cancer of this economy is more the debt and the overburden of debt and tradability of debt, which put the world on the bridge of collapse back in the days during the global financial crisis. So it's important to understand this, that it is the tradability of debt which is at stake and which is the important point that the scholar are looking at, not necessarily the tangibility or non-tangibility of the asset, as long as they are assets. Thank you very much, Doctor, for your insight. We have our final panelist on this first part is Salman. Brother Salman is a partner, as I said, at Roars, a very well-known law firm in the market. Salman, can you bring to us your perspective when it comes to the hybrid sukuk, and where do you see the pain point, and how do you see IFM contributing to make your job easier? That means a bit less fees maybe for you, but at least for participants, it's going to be great if we're coming with something which will be some kind of standard for hybrid sukuk. So please, I'm not sure. I don't see you on the panelist list. No, I see no. Sorry. So yes, Salman, if you can go ahead, please. The mic is yours.
Thank you, Brother Arian. Firstly, Assalamu alaikum to everyone, and thank you for IIFM to giving me the opportunity to contribute. Obviously, we've been working with IIFM and most of the panelists there for an extended period of time. I think, Brother Arian, you made a very good point at the beginning that I don't think that IIFM gets recognized for all its contributions in the way that it does, because I would say that any I would say regulatory capital issue that happens in the market, which is based on a mudaraba, which is issued by a financial institution, is not benchmarked against the standard that IIFM has produced. And whilst I've just condensed that in one sentence, the bigger ramifications of that is absolutely enormous, because it has, to a large extent, standardized the market. And I think the amount of effort that IIFM, puts into all of these things as a lawyer, when we are looking at the standard documentation, is absolutely enormous. So first, I would like to, thank, IIFM and everybody, people who are in the foreground and people who are in the background, whom we don't see, for all their efforts in making our collective lives easier. So in terms of the hybrid sukuk, as I think a number of the learned colleagues have mentioned, that, the market has seen quite a few twists and turns, like a roller coaster, where we were 33%, and there was I would say, there was divergence between 33%, 49%, depending on who the Sharia scholars were. But now, obviously, after standard 59, it's been largely standardized to 51%. Although you will see in the market that a number of the issuers also have issued up to 55%, to allow, the trading to continue, in case, the value of the tangibles decrease below 51%. So they keep a little bit of buffer. And I think in that sector, you will see that there is a lot of, there are lots of innovations that are happening. Obviously, the standard combination of a murabaha with an ijara, has been there. And I think a lot of the financial institutions use that, which are not based in jurisdictions where it's not possible. For example, like Oman, where you cannot issue a murabaha. And in those jurisdictions, there is a new, innovation that's come out, which is combining effectively a wakala with an ijara. So it largely works on the same basis, but it's just that the wakala component is doing its job instead of the murabaha. So I think that is going to be a very important segment, particularly for, not just for financial institutions, but also for a lot of sovereigns and quasi-sovereigns in the region, because you'll see that a number of them, they haven't been able, because, not every sovereign institution has access to tangible assets. So for them to be able to utilize a structure where they can get enough assets, and then combine it with, what I would call, like a receivable space or an asset light structure, like a wakala, which effectively allows the investors to have a piece of their general business or some specific business, or a muraba or a salam. So I think these sort of innovations are things that are going in the right direction. And I think the next step for IIFM naturally, is going to start looking at producing some standard documentation for some of these innovations. And I'm sure that these things are already in the works. And Brother Lillian, if our fees went any further down, I think I would be joining in, not as the head of Islamic finance, but as the head of charities.
Good one. Good one. No, I'm sure we'll still need you. Don't worry. No, I mean, at the end of the day, it's thank you very much for your kind words. I mean, I was just teasing you a little bit. Each time there's a lawyer on a panel, I have to say something. I don't know. Maybe it's because my wife is a lawyer, and it's part of my frustration not being able to tell her anything. Just a quick one before we conclude. I just wanted to come back on something, because we the guys of IFM, the guys behind the scenes that you thanked Salman, are looking at the questions, and they sent me a message just now saying that there is a question around the standard 62, which is upcoming, which is not yet live, the AOFI standards, and how it could impact the hybrid sukuk structure. I'm just trying to open the question. The question is basically on the the guys, the panelists, definitely you will know, but for other people on the call, the standard 62 is a standard which also going to be on the sukuk structure, having a huge impact, because it will in a way it will require investors to take more risk on the asset, or try to have the asset being registered. And I think there was something mentioned by Dr. Bashir on the title agency. I just maybe we'll start with you, Salman, since you are the last to speak. Do you see the standard 62 having an impact on the hybrid sukuk structure, on the fact that there will be more requirements and more, I would say, or less flexibility given to the SPV when it comes to taking possession of the assets? Can you comment on this, please?
Brother Lillian, before you proceed, we are receiving many questions. Do you see them on your screen?
I do. That's why I'm taking them.
All
and
the questions, right?
Brother
Okay,
Usman, so that's a question which was the question was from Shabnan Mokhtar. That was one of the first questions, which I think is relevant to take to the panelists now. Some other questions might not be answered live during the call, but will be answered just by one of our guys typing the answer. I think we already did for the first question. So, but whenever there is questions which are related to the topic directly, we will take them. So that's hence the story of taking this one. Just as a follow-up question, maybe Salman, you can start giving your view, and maybe we'll ask after that Dr. Bashir to give also his view on the impact of Standard 62, potential impact because the standard is not yet finalized on the hybrid Sukuk structure and impacting the dynamic of the Sukuk market as a whole.
I mean, honestly, I think that is something which is a very topical question because everybody has been asking how it will be. And to be honest, I mean, there's not going to be one simple answer for for every jurisdiction because naturally, how the assets are transferred from one entity to the other, differs from each jurisdiction. And for example, in the UAE, even the onshore is different from the IFC and in Abu Dhabi, onshore and ADGM. So I think there will naturally be there will naturally be some changes to the documentation. There will naturally be some elements of some, I would say, reasonable pressure on the regulators to make that process easier and for certain carve-outs to be put in. And I think that's one of the reasons why, Standard 62 has not come out yet is because, there is a lot of dialogue around that particular standard. And obviously, we have been involved in one particular capacity to sort of input on how it will impact, the growth of the Sukuk market, because you don't want something that completely stems the market because change of laws is not something that occurs easily other than in some of the offshore jurisdictions. So I would say that what has helped the market over the last few years generally is the availability of digital assets and digitalizations and all of those things, which means that a lot of the platforms have become a lot more faster, and to adopt new technologies and new ideas has become an easier concept. So what I see is naturally, there will be some tweaks to the legislation to make it feasible because ultimately the most important thing is that it has to be tax neutral because neither the obligors nor the investors would want to take any exposure to an unfriendly tax regime. The second thing will be, depending on the type of assets, the investors will not want to take unnecessary risks in relation to assets which they don't understand and which are very specialized assets. So for example, like an entity that is in the business of energy or like renewable energy, and they are like a subset of something which is not a common thing for a normal financial institutional investor to know, okay, what are the exact risks that are involved. So I think there will be some dilutions before it come out, but honestly, I am much more confident that it's not going to have the same impact as it had in 2007, 2008, when obviously, the Mudaraba and, Wakala Sukuk, suffered quite a significant change based on the Usmani's judgment in relation to those sort of instruments. So there'll be an impact, but I think it will be absorbed, and I think there will definitely be workarounds which will please the Sharia scholars and the market players alike.
Dr. Bashir, you want to say something on this one? You have anything to add?
Yeah, to my knowledge, this standard will come up, inshallah, whenever it is possible, but it will be somehow reviewed by the Sharia scholars themselves. And I think yesterday, the Secretary General of OIF is having an interview with Bloomberg, and he said that maybe they will go for another second round of public hearing for the Sukuk, so for the standard, so that it can address some of the market concern. Definitely, the standard will be having an impact on the Sukuk, and the impact will not be like the 51, it will be much greater, And because of that, there is a lot of discussion about the Standard 62, and it has taken almost 6 years to be drafted. And now it is again, maybe it will take another, maybe some time in order to be reviewed, get the feedback from the market and so before it come out. The Sharia scholars are very flexible, and sometimes it is a matter of understanding and clarification. For example, some are coming and making issue about taking the asset out of the balance sheet of the issuer. But when you are reading the standard itself, the standard puts so many exceptions. And this one, based on a very good lawyers who are documenting this one, they can always find solution that will satisfy the Sharia scholar and the what they call the issuer themselves. Then I think it is a matter of having very close discussion and the relationship between the different stakeholders, particularly the Sharia scholars, the lawyers, and again the rating agency, who are somehow much concerned than anyone about this one will taking the Sukuk from being a debt instrument to being an equity instrument. And again, here there is somehow confusion because Sukuk as it is now, they are not debt, and at the same time, the Sharia scholars are not intending to make them equity. Definitely, they are not intending to make them equity, and this one should be clearly explained and somehow to the rating agency. And based on this collaborative network, I think the issue of standard 62 will be addressed, but maybe it will need some time to be taken so that this one will be addressed. Yes,
Inshallah, we'll come with something consensual to everyone, and that will not impact much the market. There is a couple of questions. I'm not sure. I'm conscious of the time. It's already 11:40. Maybe I will, for the sake of being logical in the course of the panel, maybe it's better to issue the question to take the question now and then move to the part two. There is one question which could be also to you, Dr. Bashir, but whoever else wants to step in could, which is specifically on the Mudaraba structure, which is not directly in relation with the hybrid Sukuk, but still, I mean, it's a structure which is also very important, where IIFM came actually with a standard of Mudaraba Sukuk Tier 1. And the question is about the rate of return. By definition, the Mudaraba is a profit sharing contract, and the question is around how can you come with and stipulate a fixed profit rate. Isn't it in contradiction with the profit sharing element of the Mudaraba? The exact question is the issuer stipulates the rate of return on investment in the structure, not profit sharing ratio. Is this not against the profit and sharing principle of Mudaraba and Sharia compliance of such Sukuk? One example is last week, actually, KFH came with a Tier 1 Mudaraba Sukuk stipulating 6.25% as a rate of return. Anyone who wants to take this question, maybe we'll start with you, Dr. Bashir.
Yeah, generally in Mudaraba, thank you very much, brother. But generally in the Mudaraba Sukuk, there is a ratio. And from this, what they call issuance that I have seen, generally it will be 99% and the 1%. 99% for the Rabbul Mal and the 1% for the Mudari. But again, when it is mentioned as to be, for example, 6%, definitely it is not about a fixed return. It is about expected return. It is an expected return, and if it is expected return, then it is acceptable from Sharia perspective. It is not guaranteed. But based on the performance of the issuing institution, they are saying we are very comfortable in getting the 6%. And at the same time, they will agree that if anything come above the 6% agreed with the client, then it will be somehow an incentive to us. Then maybe I have not seen the KFH that you are discussing, but still, this is the Sharia opinion on all these kind of things. It is an expected return, and anything above the 6%, it is considered to be an incentive for the issuer. And therefore, there is no issue and there is no contradiction. And by the way, now the Mudaraba Sukuk is gaining ground. And this year, so many banks, so many financial institutions come up with one-tier Sukuk, maybe because it is not requiring even asset, because it is no asset is involved here. Just you issue the Sukuk and the people are coming and subscribing as Rabbul Mal, and they will get the money and they will give them the expected return. Thank you very much.
Unfortunately, for the sake of time, we don't have really time to go further on this question. We will just move to the second part, but the person who asked a question is free to send me separately a message, and I will chat with the person on this. I have some insight, but I will take it offline. We move to the part two because we have only another 10-15 minutes to go, a little bit more. And hopefully there will be also some other questions that we can take to the panelists at the end. So we move to David. David, thank you first of all for being a part of us and for your contribution as DDCAP to this to organizing this seminar. David, just on the green and I think a couple of panelists actually mentioned the green sukuk and the trend. I have a personal strong view on this trend, generally speaking, worldwide, and it's also in our industry now. So I'm a bit skeptical myself, to be honest. But can you share with us what's going on the green sukuk, on the SRI sukuk, and its latest developments?
Sure, pleasure. And again, as other panelists have said, thank you to IIFM for the invitation. And I would echo again the comments made by others about how important their documents are. Just as a slight tangent, we obviously deal with a lot of new entrants to Islamic finance. And they often ask us for a Murabaha agreement, and we don't do that. We're not lawyers, even though I'm an ex-lawyer. But, you know, we always direct them to IIFM, but that's the way to go because, as you say, there's been a lot of good and slightly underplayed work done by this institution. I think it's been extremely valuable. In terms of the green initiatives, yes, I think there are lots of headwinds. I mean, I think it's obvious that, you know, since the change of presidency in the White House, there's been a cold wind blowing in the green world ever since. And I think you've seen a lot of problems arising of that. I've been at many, many events and recently where people have had to acknowledge that, but have also made it very clear that work is going on in the background and that the
I'm not sure if it is my connection or if it's David's connection, which is having some trouble.
No, it's David's.
David, yeah, because it was actually frozen, but the sound was coming for some.
Yeah, apologies. Because of the early start, I've had to
no,
work
we
from
could
home.
hear you.
The
We
internet
couldn't see you
connection is
moving.
clearly
We couldn't see you
reflection.
moving, but
yeah, apologies.
no worries.
Okay. Yes, apologies because of the early start. I dialed in from home, and it's I think the internet's connection is as frozen as the weather here in London. I'm very jealous of the panelists who are wearing shirts.
This is
Yeah,
when
we're
you
having to
talk
wrap up warm here in London
from
nowadays.
undeveloped country like England, you know, see in the GCC and developed countries, the internet is better.
Okay, I'll carry on talking because it is.
It's you're still breaking up, actually, David. It's not very.
Yeah. So yes,
Maybe
exactly.
I suggest sometime it works. I suggest you put your camera off and you speak. It's unfortunate.
Okay.
We prefer to see you, but I think it might.
Yeah, I think
work
everybody
better.
knows what I look like by now. So that's good. All right, let's keep. Yeah.
Yeah. Go
Okay.
ahead.
Hopefully that'll work. All I would say is that I think, you know, in terms of the ESG initiatives, I think, you know, a lot of Muslim countries thought leadership and effort, and particularly in the space of Islamic finance, and obviously the long acknowledged overlap between the principles of ethical finance and Islamic finance. I think those efforts should continue. And I think, you know, even countries perhaps most famous for producing hydrocarbons are also making tremendous efforts in other spaces. I was at a round table with the Omani central bank governor and the Minister of Finance recently, and one of the things they were most proud of was their initiatives with green hydrogen. So there are things going on that perhaps people aren't focusing on. And I think that's going to be a good ground base for continued future Sukuk issuance, because I think these projects are going on. We have a young leader in Saudi Arabia, and I do believe that younger perspective perhaps allows him a longer overview of where he wants the country to be in the future. And so alongside obviously the hydrocarbon initiatives, we all know the efforts being made on solar panel power and other initiatives like that. So it's a complicated picture, but I mean, from my personal perspective, obviously I very much hope that the ESG foundations continue. I do think some of the other points which other panelists have made about fractionalization and tokenization will help other futures of Sukuk issuance, because I do think there's a very strong retail demand for supporting green initiatives as well.
And while we were preparing for this call, we discussed also IP rights. And can you elaborate a little bit on this? And because again, we're on the part 2 of the panel, which is on intangible assets Sukuk or intangible Sukuk. It was made very clear by Dr. Bashir that the issue is the debt instruments underlying the Sukuk and not the tangibility of the asset, I may say. So there's maybe the industry should look at rather than saying tangibility ratio, maybe we should say asset ratio or whatever it is. But can you just explain a little bit on this IP rights initiative that was done in one of the universities in the UK?
Yes, it was. I mean, I was invited to join an initiative by Aston University, which is in Birmingham, which obviously is the main base for Al Rayyan Bank here in the UK. So always a strong connection with Islamic finance. And I think the interest there is really, I think even in the conventional finance world, I think the utilization of intellectual property rights is an underdeveloped area. And I think this is an initiative to see whether or not, in the first instance, IP rights would be an eligible asset class. And I think, obviously, in subject to sector restrictions, then clearly as an intangible physical asset, if you like, the rights are available there. One of the interesting things that was done by the university was to undertake a study of relevant professionals, and tapping into a genuine enthusiasm for further exploration of this area, whilst obviously highlighting some of the more typical barriers that we always talk about with Islamic finance, which is lack of education, breaking down barriers, and a need for standardization. And again, that I suppose taps into the groundbreaking work which IIFM has done over many years as well. So an interesting area, one I think which is very early stages in certain aspects, but also very relevant here in the UK, where I think Islamic finance has made a tremendous success in the wider halal economy and in smaller and medium-sized enterprises as well, where obviously those companies can develop IP rights as quickly and as efficiently as the larger corporates. So that's an exciting aspect of it as well.
Thank you, David. And it's unfortunate we can't see you, but thank you for your insight. The last panelist, before we take maybe a few questions, maybe we'll extend a little bit the session further, if we are allowed by Dr. Ahmed. But the last panelist is Dr. Sodar Mawan from Bank of Indonesia, which is the central bank of Indonesia. I was told that he has a few slides that we will put on the screen. It's just 2-3 slides to as a basis of it's the points he wants to make. And the discussion is going to be again part 2 of our webinar. So it's more on the intangible Sukuk and on the new kind of new structure that we are seeing, including the Waqf Sukuk, which was issued in Indonesia. Sorry. Doctor, please, the floor is yours. If you can go ahead and present your few slides, please.
I can see people are saying it's very
yes, thank you, Brother Lilian. Yeah. First of all, Assalamualaikum warahmatullahi wabarakatuh. Yeah, thank you for inviting Bank Indonesia to participate as one of the panelists in this event. And I would like to also congratulate to IIFM on the launch of the 14th annual Sukuk Report. So can we go further, because we have a little bit times. So next slide. So when talks about the Sukuk Bank Indonesia, let me walk you through the key point on Sukuk Bank Indonesia, or we call SUKB. So SUKB is governed under the Bank Indonesia Regulation number 11 of 2024 on monetary control, as well as the regulation of the member of the Board of Governors number 20 of 2025 on rupiah monetary operation. So this regulation form the legal foundation for the issuance and operation of Sukuk. So Bank Indonesia also has issued Sukuk or Sukuk Bank Indonesia since 2018 as contractionary pro-market monetary policy instrument. In 2025, its features were further enhanced, including making Sukuk available for purchase by investor, non-bank, yeah, resident or non-residents, starting from October 2020 this year. So this enhancement is aimed at attracting greater foreign capital inflow, particularly in the form of portfolio investment. And also, Sukuk itself is Sukuk issued by Bank Indonesia, backed by Sharia compliant securities held by the central bank. And the akad is Musyarakah Muntahiyah Bitamlik, or we call MMBT. So let me briefly highlight the key features of Sukuk here. The first is the characteristic. So Sukuk is denominated in rupiah, fully scriptless, and offer with tenor ranging 1 day up to 12 months. The auction method used is FRT or VRT. Through more recently, it has shifted to VRT. Yeah, its underlying asset consists of sovereign sukuk or government sukuk, yeah, and also global sukuk, and return are paid at maturity. So the contract employed is, as I mentioned before, MMBT, Musyarakah Muntahiyah Bitamlik, and this Sukuk is tradable in the secondary market, including outright and repo transaction. It's also eligible as underlying asset for monetary operation. So the second is participant here. In the primary market, Sukuk is offered to commercial bank participant in conventional open market operation, either directly or through an intermediary institution. So in the second market, secondary market, Sukuk can be traded with both bank and non-bank entities, whether resident or non-resident. However, Bank Indonesia advise bank not to mobilize retail customer funds into Sukuk. Third, the transaction mechanism. Primary issuance is conducted through the Bank Indonesia ETP system. Settlement takes place through BIS4, yeah, and BIRTGS, traditionally within T+1, although some transaction now settle as quickly as T+0. Securities are held in BIS4 as the local depository, and all auction schedule and result are published on the Bank Indonesia website. Lastly, Sukuk may also be used as collateral for short-term liquidity, assistance, and as eligible securities for fulfilling macroprudential liquidity buffer requirements. Overall, we can conclude here, Sukuk plays a crucial role in strengthening the liquidity management, supporting Sharia compliance financial market development, and enhancing Indonesia monetary policy framework. Can we go to the next slide? So on this slide, we look at the issuance and market development of Sukuk over the past several years. Let me start with the chart on the left, which show the outstanding here. Value of Sukuk by tenor. As we can see, total outstanding Sukuk has grown steadily since 2019, reaching peak around 70 to 80 trillion rupiah by mid 2022. The composition is dominated by short-term tenor, particularly 1 month and below, which indicate clear market preference for high liquidity instrument. This also highlights Sukuk's strong function as short-term liquidity management tools for Islamic financial institutions. And then the continued rise in outstanding value over the years reflect growing market confidence in Sukuk as a reliable monetary policy instrument. Moving the middle chart here, we can see secondary market transaction of Sukuk. There was a noticeable surge in trading activity during 2021 to 2022, signaling increasing investor participation and deeper market liquidity. After that period, trading values naturally declined, suggesting normalization of market condition post-pandemic COVID. Yeah, despite the fluctuation, secondary market activity remain as an important indicator of liquidity and tradability in Sukuk instrument. Finally, on the right side, we see the ownership distribution of SUKB here. The data show that Islamic Bank hold 96.8% of all outstanding SUKB, while conventional bank hold just 3.2%. So this concentration reflects the strong demand from Islamic financial institution, given the Sharia compliance nature of the instrument. At the same time, encouraging broader participant, could further improve market efficiency and price discovery. And go to the next slide. So this slide explain the structure and purpose of the cash wakaf link sukuk as mentioned with Brother Lilian. So cash wakaf link sukuk here refer to the investment of cash wakaf fund into sovereign sukuk issued by the government. The key goal is to empower the wakif or donor to contribute the community economic development and broader social welfare initiative. So the main objective of cash wakaf link sukuk is to collect both temporary and perpetual cash wakaf fund and invest them in a way that generates sustainable income. So this income can then be channeled towards social and ESG related project, without relying on or reducing the government budget. So the last, if we see on the left side, we can see the four parties involved in the cash wakaf link sukuk scheme. There is the wakif donor who contribute the cash wakaf, and then the Islamic financial institution here receiving cash wakaf, especially here is the Islamic Bank. Then the Nazir, who is the trustee or manager of the wakaf asset, and the fourth is Mawquf Alai, who represent the beneficiaries of the wakaf. So we have the collection data for each cash wakaf link sukuk series, as shown on that figure. The performance varies significantly between series, with some reaching very high level of participation here. For example, series Sukuk Wakaf 005 show notable collection of 300 trillion rupiah, while others such as Sukuk Wakaf 001 and Sukuk Wakaf 008, here have more modest but still meaningful contribution. So this is illustrate the growing interest and potential of cash wakaf link sukuk as a tool for mobilizing social and economic impact through the Islamic finance. I think that's all the presentation, and I will get back to Brother Ilian. Thank you.
Thank you very much, Doctor. Very informative and good to see that very far from us, there is a lot of innovation going on. And that shows, mashallah, the depth of the Islamic finance and how we are covering so many jurisdictions. So it's always interesting to have the view of Bank Indonesia. At least I speak on personally. I mean, definitely it's a jurisdiction that sometimes is a bit far away from us, and we can see that you are, mashallah, very dynamic in coming with new structures. So we'll definitely be in touch with you, and I'm sure that IIFM will be in touch with you to try to see how IIFM can cooperate and help in getting what to me is the key. And maybe we'll move slowly to the conclusion of this panel. What IIFM is trying to do, I guess, all the panelists will agree and said it already, and all the participants will, I think, have a good idea now, is that IIFM is trying really to be the catalyzer of getting this Islamic banking industry moving forward even further. It's always fair to say that we are, yes, growing substantially, but we are still very, very small when it comes to the overall big picture of the world of finance nowadays. But I mean, despite that, I think we should continue to work hard. IIFM has been one of the main contributors to try to standardize all the documentation. It's important to highlight, and I know that Dr. Ahmed, Sheikh Ahmed is mentioning it each time he can, is that IIFM is not looking at very rigid standard. On the contrary, we definitely at IIFM over the last 20 years, and I've been part of IIFM as a board member for many years, I've always seen IFM trying to come with standards and documents which can be used, adapted, twisted by the lawyers, by the Sharia scholars. The ultimate approval, Sharia approval, is coming from the Sharia board of the institution itself and their authorities and their lawyers. But at the same time, it's fair to say that coming with this kind of framework and this kind of standard documents is helping tremendously the industry. We see more and more people talking about it. And as I said at the beginning, and I think it will be my conclusion before I leave the floor to Dr. Ahmed for the concluding remarks, is that definitely IFM is not as known as it should be in the industry and beyond. And I think definitely with this kind of events is promoting IFM. And again, at the end of the day, money is important, even if at least for dunya, we need money, and IFM do need money and do need the contribution of the members. I don't want to point fingers, but there are many institutions who are not yet a member of IFM and big names in the Islamic finance industry, and I think it's a bit of a shame. And I hope that we will increase and see an increasing number of members, so that IFM can continue the good work they have been doing over the last 20 years. There is a hand raised by IFM admin. I'm not sure if it is for me only or if they want me to just leave the floor to you, or if it is you, Dr. Ahmed, who wants to take the mic. But I just conclude by saying thank you very much, Barakallahu Fikum, to all of you, for all the panelists, obviously, the organizer, the people behind the scenes who are contributing to making this panel hopefully successful. And I hope that all participants had some good insights and good benefit from this discussion. Thank you very much, everyone, and Assalamu alaikum wa rahmatullah.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Actually, raising hand is by mistake from us. We wanted you to continue, mashallah. We really feel good.
I thought the raising hands was meant, just be quiet and stop talking.
No. We want to really, enjoy listening to you, my brother, as always, mashallah. So thank you very much, everyone, as we concluded today's insightful discussion on the evolving sukuk markets. I want to express our sincere gratitude to our esteemed, panelists, mashallah, without naming them, because you know them already. They are very known in the industry for sharing their expertise and perspectives. I also thank all the participants for their attendance. We hope at IIFM, inshallah, you found the session informative and gained deeper understanding of current sukuk trends and opportunities. As the market continues to evolve, the need for greater transparency and standardization in sukuk documentation and practices remains a key challenge. IIFM believes that the points raised regarding standardization of hybrid sukuk and intangible sukuk asset and market transparency are crucial for the industry continued growth. Dr. Bashir mentioned about the asset tangibility. I think my understanding of that is when it comes to intangible asset is asset. The tangibility issue is not here. Only when we have the physical asset, then the tangibility issue can be raised. But when it comes to intangible asset sukuk, so asset is asset. I think this is what Dr. Bashir is trying to explain. So a recording of this webinar along with the key takeaways will be available shortly, of course, on the IIFM website and its social media platforms. Inshallah, will be there. We look forward to connecting with you at our next event. And please visit, IIFM, upcoming events page for information on future events. As my brother Lilian, mentioned that, IIFM as non-profit organization, depends on membership. Without membership, IIFM cannot move forward, right? So we urge you really to consider, as everybody mentioned, that IIFM, mashallah, is doing a good job. So be part of the team, be part of the community, be part of the family in order for the sake of the industry, inshallah. So we urge you to really join IIFM to, further develop the industry. And as we know, we have a clear policy now that only members of IIFM can use our documents. Only members of IIFM can get access and use the IIFM published documents. Not because this will support IIFM, will help IIFM really to develop more documents, more standard documents. Because as you know, this work as non-profit organization needs effort, needs money, needs a lot of things to do. It's not just, and as you know, the documents are highly, well-drafted document from legal, from Sharia, from, all aspects. Alhamdulillah, to date, almost 20 years, we don't have any major issue on our documents that we published, either Sharia or legal, or because the documents are drafted by highly professional legal, firms. So we urge you, inshallah, to join us in this noble work, inshallah. So now we officially conclude this session, and wish you all the best, and thank you very much for being with us. Barakallahu fikum. هذا وصلى الله على سيدنا محمد وعلى آله وصحبه وسلم تسليما كثيرا والحمد لله رب العالمين. بارك الله فيكم. جزاكم الله خيرا.